And now it's time for development debates. We dig deeper into some of the questions shaping the future and present of China. Today, we'll see two Chinese financial commentators debate the reason Li Keqiang is moving his investments out of Hong Kong and mainland China. Li Keqiang is the chairman of Hong Kong Cheung Group and is Asia's richest man. He's referred to as Superman by some because of his business success in Asia. It's said that his sharp business mind has helped him earn his fortune. According to the 2012 Global Rich List by Forbes magazine, Li Keqiang owns $25.5 billion in assets. This makes him the richest man in Asia. It was his first time ranked in the top 10 of the world's richest people. Recently, a series of actions made by the Superman drew a lot of attention from media. Over the period of 1 month, Li Keqiang announced that he will sell over 39 billion Hong Kong dollars or $5 billion of his assets in mainland China and Hong Kong. These assets include Park and Shop Supermarket, the Shanghai OFC office building, and a shopping mall in Guangzhou. He will be shifting his money to the other side of the earth. The Superman is largely purchasing assets in European countries. As the 21st Century Business Herald reported, just during the first half of this year, Li's company completed nearly 25 billion Hong Kong dollars, or $3.2 billion in overseas asset acquisitions. Among them, the most famous one is spending $1 billion on British natural gas supplier Wales West Utilities. After this acquisition, Li's company owned nearly 30% of the country's natural gas market shares. If including the previous acquisition in the British grid and water supply fields, British media said that Li Keqiang is buying up all of Britain. So why is Li leaving Hong Kong and mainland China and going to European countries? Does this merely reflect the eye of the investor chasing higher profits, or does it foreshadow an upcoming financial crisis in Hong Kong and mainland China? Financial commentator Feng Qingyang wrote in his blog that he believes Li's investments indicate that economic problems in Hong Kong and mainland China are coming. After the European debt crisis, assets in these countries are now much cheaper than before. By comparison, after several years of bubble growth, fixed assets in Hong Kong and mainland China are no longer worth investing in. Feng gives an example to explain Li's behavior. When Warren Buffett began to sell Sinopec's shares a few years ago, no one understood or supported this idea. However, when crude oil prices started to plummet, the company's share prices also began to plunge. Not until then did people begin to understand him. Therefore, Feng believes Li Keqiang is using this method as a precautionary move to avoid China's economic downturn. Feng said that in just the last week, many new land kings have emerged. This could be seen as a sign of prosperity in China's real estate market, but it doesn't mean the bubble won't burst. So far, the market is still sustained by provincial governments, state-owned banks, and government officials who largely purchase real estate. But Li Keqiang's move might indicate that these earnings are short-sighted. However, another financial commentator, Ye Tan, doesn't think so. Ye said that it's unnecessary to see Li's withdrawal from a negative perspective. Ye believes that it's a good thing that Chinese people can influence the world's economy. Ye said that Li's company largely purchasing European assets after the debt crisis is totally reasonable. If Li continues to expand his economic empire in Hong Kong and mainland China, it would unavoidably monopolize the tiny market there, especially when Hong Kong and mainland China put more attention on anti-monopoly measures. Li's commercial empire could be largely affected. Ye refers to Li's company as a big fish that can only survive in oceans. Ye thinks the time of Li Keqiang's dominating Hong Kong's economy is over. Mainland China's market hasn't been completely market-oriented, and the worst time for European countries is over. Compared to the unpredictable market in mainland China, investing overseas is a wise choice for him. Yin notes that chasing higher profits is the essence of merchants. It's really unnecessary to blame or worry about Li Keqiang's withdrawal of capital from Hong Kong and mainland China. When China's economy is fully oriented by market demand, it's believed that Li Keqiang and his business empire would eventually return, thus benefiting China's economy.